Money Radio for a really great future. We're talking real money.
Welcome to the show. I'm Don McDonald, along with Tom Cock, and you are listening to a program designed specifically and scientifically to help you become a better manager of money and to avoid a lot of the problems that crop up in the financial industry, because when there's money involved, people misbehave a lot. Why do you think there are scams and thieves and rip-offs and con jobs and robberies and, it's just money. It makes us do dumb things. Our phone number is 855-935-TALK. That's 855-935-8255. And, of course, we love hearing from you, and we really enjoy answering your questions. So give us a call, 855-935-8255. What are we going to do with the financial services industry, Tom? What are we going to do?
Take them out back and you know what? No, all right. We've mentioned them before. There are bad financial advisors, bad stockbrokers, and when the really bad ones, the bad ones just get disclosures on their FINRA and SEC forms that they file. Yeah.
But the really bad ones get kicked out of the industry. But it turns out they don't really leave the industry. They just go into a portion of the industry that is horribly, poorly, atrociously regulated, and that is
insurance.
Insurance.
Yeah. And this comes from a new academic paper, by the way. They looked at 10 years, 2012 to 2022.
Yeah, it's a great paper. I went through the paper.
It really is. Oh, did you?
Really,
Yeah,
really good paper.
Fascinating. Insurance, they wrote, seems to attract FINRA brokers with a history of misconduct. To what extent, you might ask? Wow. 98% of the bad FINRA brokers who withdrew their FINRA registration remain in insurance.
And what are they selling, ladies and gentlemen? Indexed annuities, I bet. I mean, they didn't say that in the study, but I am confident that that's what these guys, gals, mainly, for some reason, most of the crooked ones are guys.
It says, although there's a variation across states, it's common for insurance producers to be subject of lower standards of conduct than either FINRA brokers or investment advisors.
That's an understatement.
Well, there's no, how much does the state insurance office really do to folks in the insurance industry who are peddling, financial products?
My guess is very, very little.
I mean, they use Texas as an example where basically nothing was done. I don't know in Washington, but that's going back. And I know you want to go more into this, but when you're trying to decide somebody to work with, should you work with somebody, you've heard us say this before, 100% fiduciary or broker-dealer? Well, you want all the protection, fiduciary. If you're going to work with somebody, do you want somebody who's focused on financial planning and investment management, or somebody who kind of does that as a sideline? I got this other thing. I do this retirement planning, but let's talk about the insurance. I'd rather work with someone who is a full-time fiduciary whose focus in business has always been the right thing for people, but also planning, investment management. This isn't a sideline. This isn't something they decided to add on to make a buck. That's what troubles me as much as this survey, which is really scary. If you think about it, there's all these guys running around out there, and you're right, it does tend to be more guys that are just hawking bad products, and literally it even says it in the article at some point, says they just don't care. I can't remember where the piece was.
Well, they don't care because nobody's really looking. I'm trying to find it. Let's see. In 2021, this is from the NAIC, which is the insurance lobbying body.
Yeah, which was not available for comment on this either, by the way.
In 2021, all of the insurance commissions took 2,513 actions against bad insurance salesmen.
Global, countrywide.
Right.
Yeah.
They only suspended or revoked 83 of those in the whole country, and the total fines were just $21 million for a multi-billion-dollar industry.
Yeah, you have no idea how much they make on this stuff. Oh, yeah. The profits are ridiculous.
What that tells you is that they are not regulating them. I mean, 200 of those, I think, were just some Medicare fraud insurance guys.
This isn't even the really bad stuff. Well, Medicare's bad enough, but
insurance investments are just should. I'm of the opinion that they should be avoided like the plague. If you need one, let a professional, full 100% fiduciary tell you how to get it and where to get it, and not sell it to you nor get a commission from it.
And speaking of the plague, do you see what they compared these bad insurance people to?
I forgot. What?
Cockroaches. I didn't come up with that. That was in the article.
Yeah.
That was what they said. Should squash them. It's just troubling at many, many, many levels, and I don't see it getting any better. I mean, major insurance companies hold themselves out as financial planners, as retirement planners, as investment managers. I just don't think it's a place to go to get that kind of help, period.
No, and again, that's why we want to reiterate this. If the person you're dealing with is licensed to sell insurance products and they're holding themselves out to be a financial advice provider, run away.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan. One that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Apella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Apella is an SEC-registered investment advisor. See ApellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
And if you want to vet somebody, we'll help you vet them. It's one of my favorite things to do. Just give us a call at 855-935-TALK or send your vetting questions in on the contact form at TalkingRealMoney.com. I love looking these folks up.
Yeah, and do you want to go through how people could do that on their own?
Oh, yeah. Oh, by the way, you can do that on your own. Yeah. If your person is FINRA registered,
that's important.
Financial Industry Regulatory Agency, they will be at BrokerCheck.com. BrokerCheck.com.
Yeah.
The good news is, though, SEC registered advisors are there also. There's just a link to look at their regulatory filings on another site. So you can look everybody up, except who can't you look up on BrokerCheck.com?
Bad referees.
They're not there? That's correct.
Yeah,
yes. Insurance agents.
That's right, yeah.
Anybody who is solely insurance licensed will not show up there. And it might be fun if you see somebody who's been kicked out by FINRA, who's been expelled.
Yeah.
Go to that state insurance commissioner's site and see if they're insurance licensed.
Well, and this clearly points out that so many of those people, that's what they did. They simply moved on to sell insurance products.
Over 70,000 of them.
It is cockroach-like, the fact that they live on in another way.
That's a lot of cockroaches
scurrying about. Yeah, this is again. I think the biggest issue here is the fact that these are regulated, and I'm not a government guy, by the states that just don't have the expertise to deal with these things.
There are some things that are beyond our ability to self-govern.
I agree.
But
I think the federal government, because they have the more expertise on this in this area, the state insurance commissioner, sure, set rates, do those things.
Okay, let's before we go to the phones, the whole indexed annuity thing when they came into being a decade or so ago,
speaking of cockroaches,
15 years ago, they were originally intended to be regulated by the Securities and Exchange Commission.
And then they got
that was the original
clearance.
intent.
Yep.
Well, then they spent, if I remember correctly, about $200 million.
That's so funny. That number came right into my head before you said it.
Lobbying Congress to change the rules to make them, because, of course, they're claiming, well, it's this states' rights. This is all about freedom. We want freedom to sell people garbage that it's not good for them.
That no one will be looking at.
So please make us under that somebody's not going to look, and that we can pay off a lot easier than we can an SEC commissioner.
Much. There you go.
I'm sorry.
So that's what's happened.
I know. I'm sorry. Some of you insurance commission people, I know you're on the take. I know you're on the take because you take jobs in the insurance industry when you leave your job with the insurance commission. You do. That's conflict. Oh, we don't care. 855-935-TALK is our phone number. See, it makes me mad. Let's go to Paulsbo. You know Paulsbo. Beth, welcome to the show.
Yes, I would like to hear your take on this Senate resolution number 8201 that we're voting on in Washington regarding investing long-term care funds.
Okay, that has to go to Tom because I know nothing about what's going on in the great state of Washington locally.
Yeah, and I already voted.
About this?
Yeah, I did. I
vote?
voted. I did. I'm going to look it up so I'm not completely. I believe this has to do with investing the money in stocks and bonds. That didn't come up right. Did you say?
I think it's already in bonds.
SR. What was it?
SR 8201.
8201.
8201. Yeah, I believe this just would allow them to. Yeah, here we go.
I think you mentioned this to me, where it allows them to invest
state monies from the long-term care money they're collecting into. I'm trying to make sure I got this
stocks.
Right.
Yes, they can go into stocks as opposed to just fixed income.
I'm in favor of that.
Yeah,
so I know this is something that's always, and I know Social Security doesn't do it because people just are up in arms about investing money in stocks. That's so risky. Well, it's had more volatility, but you've always gotten your money back with a higher return in any period of time. So yeah, no, what's your take, Beth? Are you opposed or are you in favor of this?
Well, I was kind of on the fence, but I thought, yeah, probably let them go ahead and do it. It said they would do it with fiduciary. So,
well, they do it with the state retirement board. They take pension money and they invest it. Yeah. Not always the way I like it either, by the way. Yeah, for a very long time.
I mean, I don't live there. I have no horse in this race, but to me, it sounds like it might be better for those who get benefits from the fund and might keep it from running out of money over the long run.
Better odds
of the costs of long-term care. I mean, they're talking about a diversified portfolio that would. Yeah. They're looking to trying to get up to maybe a 6 or a 7% average annual return, which is a balanced fund kind of return.
Yeah,
it doesn't mean they're going
stocks
crazy.
And bonds. Yeah, and just again for full disclosure, I'm paying that tax, although I never see a dollar of it. I don't think I qualify.
You don't qualify.
No,
you don't qualify for anything.
Come on.
Nothing.
Really?
You qualify for no subsidies. You don't even get the senior citizen deduction.
Okay.
And you are one. Sorry.
Yeah, I know. Trust me. I'm
Thanks
elderly.
for the call, Beth. We wish you well.
Great call. Yeah.
855-935-TALK is our phone number, 855-935-8255.
My wife still loves me, by the way. Should I qualify for that? So
I didn't say you didn't qualify for other perks. I just was referring to
anything to
tax breaks.
Okay.
You just make too much money.
Okay.
Congratulations.
No, I'm not arguing. I'm happy to make it. And I know you've already picked on me about going to Europe and Hawaii in the same year. So I won't tell you about the 2026 travel plans then.
Yeah, we just took our little 3-day vacation. We drove.
Really go out of town there. Oh yeah, right down the road.
Minutes. Yeah. Tom's going to get on a plane and go to Hawaii again. I'm just going to drive down the road 5 minutes. We'll be back.
Tom and Don are talking real money.
This episode is brought to you by LifeLock. It's Cybersecurity Awareness Month, and LifeLock has tips to protect your identity. Use strong passwords, set up multi-factor authentication, report phishing, and update the software on your devices. And for comprehensive identity protection, let LifeLock alert you to suspicious uses of your personal information. LifeLock also fixes identity theft. Guaranteed or your money back. Stay smart, safe, and protected with a 30-day free trial at LifeLock.com/podcast. Terms apply.
For your real life and real future, Tom and Don are talking real money.
Because it's really important that you get this stuff right. This is the way you take care of yourself and your family in the future. You've got to deal with money in this world. You don't have a choice. You really don't. We are no longer living in an agrarian barter society. That left us hundreds of years ago. 855-935-TALK is the phone number. That's how you get in touch with us every Saturday afternoon on the radio that becomes a podcast later. Let's go to Puyallup. Gene, welcome to the show.
Hello, can you guys hear me okay?
Of course. What's up?
I'm in the truck, so difficult.
Yeah, you're fine, Gene. Go right ahead.
What your opinion? Great, thank you so much. Hey, curious what your opinion is on UGMAs, UTMAs versus 529s for the grandkids. We currently just set up accounts a few years ago, the Wellesley account and the Vanguard system, because our kids' grandparents did that years ago. So looking now to get into something that's a little bit more aggressive than just the 40-60 split on the Wellesley account.
Yeah, okay, so this always comes down to what the purpose of the money is. If in my life, I give money to my grandkids, but I put it in a 529 because education is paramount to me. I love the fact that they're going to be able to use that. And by the way, they can use it for high school and post-secondary education. If you just want to make a gift to somebody that they can use after age 18 for a car or buy whatever they want.
21, yeah.
Yeah, then that's the way to do it. I mean, so again, to me, it comes down to that.
UGMA would be the way to do it.
Correct, yeah. Uniform Gift to Minors Act. So, I mean, there's a vast difference between those two things. Or maybe you do a little bit in both. You say, look, I'd like you to get an education, but here's money if you want to buy a car.
It's kind of about control, too. Because with 529 accounts, you have control over those assets until they're doled out, actually paid out to whatever institution or put into the kid's Roth IRA. You then can change the beneficiaries of that account, whereas with a UGMA or a UTMA, that is an irrevocable gift.
Yep, that's theirs.
While you as custodian can do things, you shouldn't do things. You have to, as custodian, you have to act in the best interest of the person who's receiving the gift.
And did I hear you right that you're in a portfolio that's 40% in stocks and 60% in bonds?
Vanguard Wellesley fund. It's an old
that is
fund.
An inappropriate asset allocation for a young person, in my book.
Yeah.
I mean, you're costing a lot of money.
It's an old fund, and he said it came from his folks, and
okay, that would be an instant change to me. So
yeah, and plus it's actively managed, so I would look for just index products.
And you could just buy if you really got to have bonds, Vanguard Balance. But that's why I like the age-based offerings in 529s, because when they're really young, they're going to be mostly in stocks. They get closer to college, a few more bonds because you want some balance there.
Yeah.
Sure. If we go into a 529 account, can my wife and I remain the custodians, and does that come back on us for any kind of tax purposes?
No taxation.
No, the money's still yours, though. That's correct, yes.
It's yours, but you don't get taxed on it.
No.
And the nice thing is you can then decide if you originally earmarked it for grandchild A.
Yep.
And grandchild A blows their life up.
No, it doesn't want to go to college or something. Right.
But let's just say they really go off the deep end. You don't want to give them anything. Well, you can now go to grandchild B or C or D and give them that money.
Yeah.
So would you recommend putting everything in one account versus having a separate account for each grandchild?
Well, you have to have one. You have to name beneficiaries
you have to have a beneficiary
on the accounts, but you can change those.
Those could be changed. And in my family, we're doing that because of a different situation. But we're taking money that was set aside for one person and moving it to somebody else. So, yes, they have to have those 529s have to be open with a beneficiary in mind, even though the money remains yours, technically.
Right.
Okay. And 3 separate accounts is okay, just a little bit more to manage?
It's really
but in today's world,
it's all
I don't do any management.
I mean, if you went with, we love the My 529, the Utah 529 plan.
Do the age-based.
So well designed.
Yep.
Its costs are low, and they have a wonderful age-based.
All I've done is put the money in there for the last 17 years for my daughter, and I just started a new one for my granddaughter. So pretty easy to do.
Okay. Okay. Great. Thank you very much. Appreciate it.
You're
My
welcome.
pleasure. And
Thanks,
what a
Gene.
great gift. What a wonderful gift that is.
I know.
It's
And
just-
we're coming up after we get through Thanksgiving.
Yeah,
which
no,
is still
I'll
a
be
month
doing my
away.
holiday ones. Yeah, I
And
know.
then it's
I've already
like
started building my list for the.
Then it's
for the
like
holidays.
it 'tis the season for rough.
Yeah, and I don't know how to
IRA.
say this nicely, but you're not on the list. I just made the list. I hope you don't feel bad.
I'm good.
Okay, good, because you're really not on the list. It was,
Yeah, I kind of figured I
sorry.
wasn't, but thank you.
Feeling half
Hey,
bad.
just wanted to let all of you listening know that phone calls are allowed. If you want to call, this is a good time. 855-935-TOM.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Have a question about money? A real question? Not a fake one?
Halloween?
855-935-TALK is our phone number, 855-935-8255.
Halloween, speaking of money, it's like millions of... In my day, you just made a costume, went out for the night. But now it's, it's the farmer stuff that's all there. It's just costumes, there's the stores, the whole thing. It's just
don't
big,
even
big,
talk
big
to my
business.
family about costumes. My granddaughter wants to dress up as a K-pop demon hunter.
K-pop demon. Oh,
That's all
that's
the
the thing.
rage.
I know it's the front page of the Wall Street Journal today.
Yeah,
so.
and guess what?
Yeah.
My daughter can't find anywhere.
No, they said in the article
K-pop demon
not gonna
hunter
happen.
costume. So she's
Yeah.
making one.
Wow, that's dedication.
Excellent.
I tried. I was out with my grandsons. We went to the Halloween store.
Mm-hmm.
I was going to get an outfit for my wife, but I called her and she said, absolutely 100% no, not that outfit.
That ain't,
So,
not that
that's a
outfit.
bad idea.
You know, it used to
I
be.
thought it was kind of
used to
cute,
be
but no.
Here in Celebration, we're in the tourist corridor in Central Florida.
Really?
Yeah. And
Okay.
they do literally bus children in.
That's still so shocking to me.
The hotels charter a bus, and they tell their guests, because Disney's packed, or Universal's packed.
Sure.
So they say, get your kids, put them on a bus, take them to Celebration, and you get great candy.
They've been doing that for 20 plus years, right?
Oh, yeah. And sometimes, every once in a while, we've seen two very creative costumes regularly. One is this one's the better one, where they steal the hotel pillowcase and they cut holes in it for the kid.
God's sakes.
For the eyes.
Really?
Yeah.
That's
Yeah.
outrageous.
Well, the other one is they steal the towel and they cut two holes in the towel and just
my
drape it over their head.
Wow. Okay. And then they
See,
go
I've
to all
seen
these
both of
homes and
those.
collect gazillion dollars worth of candy.
Yeah.
That's nuts.
Yeah.
What if I think one year you decided not to participate, right?
I think we've skipped 2 or 3 where I
And
just
so
get
what happens?
so
Did they just
tired
soap
of it.
the windows, or what exactly
no,
happened?
There's so many places to hit. They just
walk right by.
on by.
Okay.
But on the main drag in town, the main street, which is called Celebration Avenue,
Yeah.
those poor homeowners average about 2,000 trick-or-treaters a night.
I think they have it coming to them because they do that thing with soap that they pretend to be snow. So I think anything after
That's
that, you deserve
downtown,
what
yeah.
comes to you. Yeah, okay.
Yeah,
that's my take. So,
I have been meaning to tell you all about something for a while.
Is this finally your retirement?
No.
Because I got Roxy in the next room ready to go anytime you're ready to bail.
I'm not leaving any.
Diversification.
Yeah, you wish. Every time I put up a podcast, and by the way, I want you to meet the entire podcast production staff, ladies and gentlemen. They're here with me in this room. The entire
and I having been in that room, there's no room for another person. I've been in there where there's 2 of us.
But it's so funny.
crowded.
I've watched some of these videos about some of these podcasts. I was watching one of them.
We know people that do.
40 people who work for him doing the podcast.
No bragging, but the size of our podcast audience suggests that we should have 10 or 12 people producing the program.
Yeah, we got one.
Yeah, I know.
And every day when I put up the podcast on the podcast services and on talkingrealmoney.com, when I'm done with that, I go into the email portion of the website and I send an email. I make up an email and I send it out to all of the people who subscribe so that they know there's a new podcast up.
Yes, you do. Yeah.
And you can listen to it at Talking Real Money or wherever you want to listen to it. And I have been sending these out for over a decade.
Yeah.
The funny thing, though, is we are stuck, and we have been stuck for 2 years at about 1,400 people. New
On
people
the
sign
list.
up. Yeah.
Oh, and they
people
come or
sign
go,
up,
whatever.
and
Yeah,
then they
enough
drop
go.
off, and they sign up.
Which is weird because we've got so many more people that listen to it than
Right.
that.
I keep watching that going, wonder when we're going to add more people to the podcast email.
Oh, so this is a pitch is what you're getting to.
Well, I'm just saying, if you want to be notified.
Right. It is a nice thing. I love getting
all
emails.
you have to do, this is so easy. You go to talkingrealmoney.com and look on the right-hand side of the page.
And
you're
going
to see a white box that
Yeah.
says, get new podcast notifications. We never share your information, and we don't.
Okay,
with
let's
anybody,
take a step
anywhere,
back.
anytime. What?
Because, I've got friends that still think AM radio is the only thing you can do in your car. Let's assume they know nothing about, they're driving right now, they know nothing about podcasting. And I've got friends, this is true. So if they know nothing about it, but they have an iPhone, how do they even start doing podcasts at all? Not doing one, listening.
Okay, I was going to say, because pretty much everybody has an iPhone or an Android phone.
That's right. But there are people, and I know them, that have never listened to podcasts. I only listen Saturdays. I've never heard. I didn't know you had a podcast. I don't know how that works. So tell them, please, how to do that to start with.
You go to your podcast app, and you can. By the way,
no. Is that on the phone once you get the phone, or do you have to go to the App Store?
On your iPhone, yes.
Okay, so it's that little purple thing.
It's a purple thing with a little. Looks like a little. It
says podcast app.
With,
right.
With little circles.
Then you just type in "Talking Real Money."
Right, or you can just type in Don McDonald or Tom Cock or whatever.
Okay.
We'll show up. You don't even have to remember the name of the show. That's why I said you can listen to, like Litreading there, one of my other podcasts. You just type in the name. Then what you can do is you can have it automatically download for you every time there's a new episode.
Yeah,
but if you go to talkingrealmoney.com, you can click on the sign-up thing, and I'll send you an email saying, here's what today's show's about, and it's available right now. I mean, I do it literally most of the time within 10 minutes of posting the new podcast.
I love it. And
it goes out.
It's right there, and it's available. Yeah. Okay, so they can either go to the podcast app, but then if you want to get the regular thing, then you go to
listen.
Yeah,
but
you can go to Talking Real Money.
Website, Talking Real Money.
All right.
Yeah. As far as the podcast app goes, if, for example, you have CarPlay in your car, you just plug it in to your USB port.
Yes, no, I know.
And it shows up on your screen.
Well, mine does it automatically with my car, but okay.
Well, you have a newer car. The newer cars now do it with Bluetooth.
That's right. Yeah.
You don't have to plug it in. 855-935-TALK is our phone number. We've got lines open. Come on by. We'd love to talk.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Welcome back to the show that tries really hard every weekend to make one of the most confusing, frustrating, and often expensive things we do less confusing, less frustrating, and cheaper. That is dealing with money. I'm Don McDonald. I'm in Florida. That's Tom Cock. He's in Washington. Together, we're the cast of Talking Real Money, the show and the podcast. Along with an occasional
everything you said so far is
Roxy.
True. Yeah, I know. That's just my little veiled threat to keep you going. That's all. So
I'm still going. Don't believe I can't believe
I don't know where
am.
You're going, but yeah, okay.
I figured I'd be dead by now, but I'm not. So that's good news.
Yeah, that's good news.
And you can call us right now at 855-935-TALK if you want. You don't have to. We're not making you. We can't. If we could, we would. But we do get questions that are sent in at talkingrealmoney.com. So we'll just thumb our noses at you who aren't calling and read a question that somebody sent in.
Crystal Lake, Illinois. Matthew writes, my employer, local government, offers 3 different 457 retirement plan providers. Mm-hmm. Nationwide, Mission Square, and Schwab. Ooh. I have Nationwide. I'm thinking of moving my money if the costs exceed Schwab's. Not sure where to find the costs. I'll stop there for just a moment. It's basically impossible. I mean, I don't know my own plan, what it's actually costing me. I don't know if I could figure it out either. We took one apart, you probably don't remember, 15 years ago from Merrill Lynch. And I think we spent like a month. We gave it to a bunch of people, tried to have them. we could not figure out what the real cost was. But Matt goes on, Matthew, I have 2 products managed for me moderate fund SVC class that he says has a PE ratio of 0.8, 0.8%.
Oh, no, that's expense ratio.
Yeah, that's what he says, PE, but yeah.
Yeah, but it's expense. He means expense.
Managed for me moderately aggressive, 0.84. He's 54, be retiring in 3 years, have access to the money at this point. And that that doesn't make sense to me either. If you'd have to pay a 10% penalty if you took money out of a 457 before 59.5, wouldn't you? Well, I know you'd have in a 401k, but I'm pretty sure. I'm not sure if it's worth changing. I don't know much about investing. I started my career, chose Nationwide by default, where the previous retirement provider changed. I don't want to waste money on hidden costs and fees. Can you see what I'm paying to keep this account, and if it's worth the time to switch to Schwab, where I feel I can find low-cost ETF choices? Now, a couple things to pay attention to here.
Now, but I just want to clear up something real quick. 457s are not 401s. If you leave your job, you can take it out without penalty.
You can take the money out? Mm-hmm. From what age forward? There's no penalty? Because you're not 59.5.
It doesn't matter.
Okay. Well, so that part.
That's 457s, not 403s or 401s.
Okay. Couple things, though, to pay attention to here. First of all, you're talking about the expense of the actual funds you're in. There are all kinds of other expenses related to 457 plans.
And my guess is, I don't know the numbers, and I don't have access to them, because they're going to be specific to your plan, probably. Yep. But my guess is that Schwab is going to be less expensive on an administrative from an administrative position, and far less expensive on the ETFs or mutual funds you can get into.
Because the products you're in now, the manage for me. So you mentioned that's 0.8. Yeah, the reason of 0.8 because they're going to say, well, somebody's buying and selling and doing stuff in there.
It's actively managed.
Right, correct. Versus owning in either a target date fund at Schwab or a total market fund at Schwab, which are going to be 1/10 of that cost. I mean, it's going to be far cheaper to own those. So, yes. And then part 2, as Don said, it's just impossible to parse out the other. There's administrative costs. There's all kinds of other things that it's a plan by plan situation.
And they can be specific to just your employer.
Really difficult to pull that apart.
Because bigger employers negotiate lower fees, smallers end up paying higher for the same products.
Yeah. Yeah, I know. So anyway. I probably, if it was my money, even if it was only 3 years, I'd probably still move to Schwab. And if you said you don't know much about investing, I'd just buy a target date fund.
Yep.
You're 54, buy the 2030 target date fund.
I think
quitting in 5 or 6 years, and then you're all set.
855-935-TALK is our phone number. Let's head down where you really should be doing the show, but you're not.
That? In Bellevue. The lake? Oh, Bellevue. Okay. Bellevue. Yeah. Boy, this is nice. I admit it. This is just so much easier than rambling to Bellevue.
Rob, welcome to Talking Real Money.
Nothing against Bellevue, because I am a Bellevue High guy, too. So, Rob, how's it going?
Yeah, hi, guys. Yeah, I'm a Sammamish High School graduate.
Well, we're becoming disconnected then. I'm sorry to hear that.
Oh, no.
That's the end of that call.
Bad.
Interlake, they're gone, too. Yeah. Newport, you're out.
Yeah. Sure. This is going to be kind of light, but I do want to say I went to my first RetireMeet event early this year.
Thank you.
And so a lot of good info. Long-time listener. And also had a positive surprise the other day. I was driving not too far from my home on a street here called Northup Way.
Yeah. Mm-hmm.
And I was driving past some business areas. It's basically a business corridor. I saw a building with the sign up front called Apella.
Oh, I thought you were going to say you saw me driving erratically down Northup Way, so I'm just feeling so much better now. That's good to know. I was a little nervous there.
If you threw a rock at the window on the left side of the building, you would have hit Tom.
Yeah, that's exactly right. Maybe you may have woken me up, so don't do that. I'd appreciate it if you didn't. So.
Yeah, so that was great. The point I just wanted to make today was a little bit about coffee and cocoa futures.
Okay, I'll tell you what. On that note, hang on, and we will wrap up the show with a little coffee and a nice bit of chocolate.
Oh, it doesn't get any better than that. There you go.
855-935-TALK. Call every Saturday.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan. One that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Apella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Apella is an SEC-registered investment advisor. See ApellaWealth.com or the firm's Form ADV for more details.
For your real life and real future, Tom and Don are talking real money.
All right, we're going to have a nice cup of coffee, maybe a latte with a little chocolate in there, courtesy of Rob in Bellevue. Rob, what's your comment on coffee and chocolate?
Yeah, so I don't know how often you guys look at futures charts. I do it occasionally. Yeah, I do it occasionally, I think just kind of for fun and interest. But I do occasionally check the coffee and cocoa futures charts. I use Yahoo Finance for those. And a little bit of good news, I think. So the cocoa futures, looking at 25 years of price data on Yahoo Finance, it's actually peaked over the last year at about $12,000 per metric ton, and it has dropped 50% down to about $6,000.
Wow, Tom, you can buy a ton of chocolate for $6,000.
Bring the truck. Let's go back it up. Let's get her done.
Well, that's good to know. I'm feeling better now.
If that'll continue to drop or not, but I think that's positive.
I always go long on cocoa myself, but that's just me. So
now there's a little bit of bad news.
Yeah.
Well, coffee. Yeah, coffee one is not so positive. Yeah, coffee. Looking at 25 years on Yahoo Finance, and I do not invest in futures. I am not involved in that arena. But coffee is at an all-time high. So that is probably not good for coffee prices. The price at Yahoo here is $400. I believe that is for 100 pounds of Arabica coffee. But that is basically an all-time high. Though in 2011, it did hit $300. $300 a pound.
You know what? You're not going to keep me man. You're just not going to keep me from drinking coffee. I'm going to go get some anyway. Thank you so much for the facts and the figures, and thank you all for doing what you do, which is listening to us. For some reason, you just keep doing it, and in higher and higher numbers all the time. We appreciate that.
We do. We really do.
We really, truly do. And by the way, if you want to hear, I want to mention this again. If you want to hear the scary stories on Litreading, the podcast.
Good stuff.
They'll be pulled in November. All the scary stories get pulled until next October. Ooh. They're only out for about a month. And then you're going to ghost everybody, I guess, huh? And then we're going to ghost you with scary stories until next October. So if you want to hear some scary stories, go do it now. But coming up, we'll have Christmas stories to take their place. So that's holidays coming fast. Yeah. Hey, thanks for listening. If you have anything you want to ask, money related, you can do it anytime at TalkingRealMoney.com on the contact form. Do it. And if you want to get in touch with Tom and his ilk, you can go to TalkingRealMoney.com and click on Meet an Advisor. He's remembering. I wrote it down, I tattooed it, and I've got it right where I need it. So take advantage of that. And we talk to people every day that don't become clients, and we give you some help. So that's the other thing I love. And there's no obligation, no compensation expected. None. No high-pressure sales pitch. Hey, thank you so much for being here. Please tell a friend or two or a dozen. And if you like what you hear, leave a review at Apple Podcasts, 5 stars. If you don't like what you hear, well, don't leave a review. Quit listening.
Just stand around talking real money instead, right?
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Apella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Apella Wealth, a fee-only registered investment advisor. Please see Apella Wealth's ADV Part 2A on our website for information regarding Apella's fees and services. Apella Capital, LLC, DBA Apella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Apella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.